the meantime, has hit a fresh 12.5-year high against the yen, extending a strong run on the back of upbeat manufacturing and construction spending data. Joining us now to discuss is David Pierce, Chief Strategist at GPS Capital Markets. David, thanks for joining us this morning.
Thank you very much.
The ISM number really caught my eye yesterday. Of course, data points like this exceedingly important when we're discussing the Fed's timetable. What did you make of the recent data that came out yesterday, and what does it mean about that potential rate hike?
Well, that's a good question. When you get numbers that come out like that, we always are a little bit concerned about the market, wanting to know where it's going to be.
Sure.
And one of the things that has really been hard lately is to understand the direction we're going to see as far as rate moves. The problem with that is there's been a lot of mixed messages in the marketplace. Sometimes we've been getting a lot of really good numbers, a lot of really bad numbers, and we've really had a lot of mixed messages recently. And so that's just really putting a lot of confusion in the marketplace, and that's making, really to me, it's been making it much more difficult for us to decide which direction things are really going to go.
Yeah, and we should point out that futures have moved significantly lower over the last half an hour. Right now, the Dow indicating a triple-digit move to the downside. Do you think that has to do with a stronger dollar?
Well, we've seen the dollar back off a little bit today versus where we were at earlier in the morning. We saw the Australia not raise their rates, which was good news for the Australian dollar. And then we actually saw some decent information out of Germany. And so the dollar's backed off a little bit. But going back to your question, when we look at the U.S. dollar and the strength of the U.S. dollar, that really has had a big impact on the economy. And I think in the long run, it's going to hurt the U.S.
It's already hurt the U.S.
Yeah, it has already hurt the U.S.
Look at trade deficit numbers among
yeah, we do.
earnings season.
But when you look at the U.S. dollar is still the strongest it's been in 12 years, as you pointed out. And the dollar could not sustain that strength if the U.S. economy could not absorb it. And then again, you've got to look at it in relative to all of the other countries in the world. Japan is obviously loving the strong U.S. dollar because the U.S. is buying so much product from Japan. So it's been a great thing for the Japanese economy.
David, we're just going to pause quickly and bring you some flashes coming out of Greece in the last couple of minutes. The Prime Minister Tsipras has said that Greece has submitted a comprehensive proposal for agreement to lenders on Monday night. He says those proposals are specific, that they are realistic. He said negotiations are tough and they are determined. He says that a decision rests on political leaders in Europe. So this is more of the sort of same rhetoric that we've seen in the last couple of days of posturing. But really over the last 24 hours, we heard that there was a late-night emergency meeting from the creditors, and Tsipras now coming out this morning to say that they submitted that comprehensive proposal. We just saw the euro there, of course, up 0.6% today, and equity markets in Europe down over 1% today. David, let's bring this discussion back. Now, of course, there's huge uncertainty around Greece. We've got a big month coming ahead, mainly towards payments to the IMF, which are important but not crucial, then coming some payments to the ECB later in the month.
Right.
Which path should they go on from here?
If it was me and I was Greece, I frankly would probably want to get out of the EU. Well, not the EU, but the euro. The reason for that is it is really difficult for the Greek government to really make a lot of interest rate moves and economic moves that are going to really stimulate their economy like they need to. If you look at over the last 10 or 12 years, there's been a lot of Greek companies, good names, good companies gone out of business. And a lot of that is because they cannot be competitive in the exchange rate market that they are living under. If they could have allowed the Greek drachma to devaluate over that period of time, it would have made them more competitive. And I think that the Greek economy would be much more competitive than it was now. Additionally, I think that if Greece was out of the euro, you would have a lot more desire and a lot more interest in the Greek people to take charge and be in charge of their own future rather than trying to rely on other companies in the European Union.
Okay, David, interesting perspective there. We're going to have to leave it there. David Pierce, thanks very much for joining us.
Thank you.
He's Chief Strategist at GPS Capital Markets.
And we will keep an eye on the markets. In the meantime,